Hi everyone, welcome to the live virtual classes of Board of Studies ICAI on the paper Corporate and Other Laws. Topic which we are covering at present is share capital and debentures. As you know, this is our third session of the module, and we have already covered this topic in the previous two sessions. And we have gone through that in quite detail. Now, today we are going to cover some major portions of the syllabus today. In terms of the learning outcomes, you can see that we have covered the topics till I, and now today we are going to cover J, K, L, M. And in terms of specifically, if you have a look at the sections, this is what is the bifurcation of our learning. Starting from section 43 to section 64. Section 63, almost we have covered. Section 62, probably we have covered. Section 61, in fact, we have covered. From section 62, we have to move further. Section 62, we dealt with in our previous session briefly. Today, we will have a recap of that, and then we will begin with our session. I would also like to draw your attention to this particular module, which you are able to see. So please refer to the latest module, which is there on the your portal for your learning, right? So which covers section 43 to 72. And we have these sections which are bifurcated into different topics. Your module is very beautifully arranged, which has got all components, including the examples. Today, we will also cover some of the examples while we are discussing our topics and modules. To begin with, let me move ahead with one section, and this is section 72, which is actually the last section of this particular topic. However, we could have covered this under transmission because transmission of securities actually relates to power to nominate. And this section enables the persons to nominate some people who would be their legal heir in case of their death. So the section goes like this, and it says every holder of securities of a company. When we are talking about securities is a broader definition which includes debt, equity, derivative, everything is included in that. May at any time nominate in the prescribed manner any person to whom his securities shall vest in the event of his death. This procedure you will see is there in case of bank accounts, in case of demat accounts, all these places, there is a requirement of giving a nominee. So you make a nominee, and that is for the benefit of future compliances. If the person is not alive, then their legal heirs don't have to go ahead with legal complications to get probate, succession certificate, and all those things if there is a proper nomination which is done. Moving ahead, where the securities of a company are held by more than one person jointly, the joint holders may together nominate. This is about the joint holding of securities. Then, in case subclause 3 basically says that notwithstanding anything contained in any other law for the time being in force, or any disposition, whether testamentary or otherwise, in respect of the securities of a company, where a nomination made in the prescribed manner purports to confer to any person the rights to vest the securities of a company, the nominee shall, on the death of the holder of securities, as the case may be, on the death of joint holders, become entitled to all the rights in the securities of the holder, as the case may be. Okay. And unless the nomination is varied or cancelled in the prescribed manner. So basically, it is talking about the general procedure of nomination of securities. So either it can be by single person or by the joint, holder. Now, here the person who is making a the person who has a power to nominate has all the powers to change it. So, say for example, I have securities and I nominate my son or my wife for the securities. Tomorrow I can change it to anyone. So it is basically just like a will where it can be changed many times. Similarly, nomination can also be changed many times. There is a specific form through which this process has to be undergone. Where the nominee is a minor, many a times nominee may be a minor also, like for example, a minor son or daughter. Then in that situation, they will, become owner of the securities during their minority, but definitely the guardianship rules will apply. So this is what is Section 72, power to nominate. Now, in our previous session, we talked about one example, which, if I'm not wrong, Hardik asked and we were discussing. And this gave me an understanding that you people have to actually see these examples not as solitary, but refer them along with the sections which you are reading. Say for in this example, the multiple choice question, it is basically referring to section 56 subclause 3. Okay, so it is saying that where an application is made by the transferor alone and relates to partly paid shares, the transfer shall not be registered unless company gives the notice of the application in such manner as may be prescribed to the transferee, and transferee gives no objection within 2 weeks. So you have to calculate these 2 weeks. And when you calculate it from 2nd of March plus 14 days, it comes to 16th of March 2024, right? Similar kind of an example was there in your module also, if you would recollect this example related to Himanshu and Chaitanya. So Chaitanya Progressive Books Limited. So this is the example. My advice to you would be that kindly refer to these examples and refer these examples individually with your specific with your specific understanding, because these are all dates and duration. So I am seeing that many of the questions in your module is based on these dates. So for you people, probably these dates are required to be remembered. In terms of transfer, I told you that there is there is SH4, but wherein there is a transfer unilaterally, there it is SH5. And where no objection has to be received from the transferee. So this is the example which we discussed before, and I thought that I will revisit this example for your better understanding. Let us now come back to the today's session, but before we move ahead to the session and then try to okay. No, Section 72 is not an additional info. I have provided you that information is important. Coming back to the other queries, I think if there are specific example queries, we will take it later on. To unpaid calls. Okay, we will take all these examples towards in mid break. Okay. Now, let us move ahead and talk about the topic, that is alteration of share capital. Now, alteration of share capital is the focus of today's lecture. And section 61 to 70 deals with alteration of share capital. And as I told you that share capital is very, very, sanctity of share capital needs to be maintained. The maintenance of capital is a very important hallmark or pillar of corporate law. In fact, the whole corporate governance revolves around maintenance of capital and preserving the capital. You cannot just allow the capital to wither away, because everybody is looking towards capital. Either you talk about the equity owners, or you talk about the debt owners, or you talk about the creditors, vendors, everyone, whosoever is associated with the company, which is an artificial entity. So artificial legal entity, you basically are focusing on the capital part of it, because that is what is the main thing on the basis of which everybody relies their trust and confidence. Second thing which happens is basically the management, but definitely the management also is accountable towards maintaining that particular capital. So whenever there is an alteration of capital, there are required procedures. You cannot do it just like that, that you change your capital or you make alterations to the capital. There are detailed procedures which are laid down in section 61 to 70, which we need to follow whenever we are going to change the capital. Now, there are multiple modes in which the capital can be altered, and here you are able to see 5 modes in which the alteration of capital can be carried out. So, if you see power to limited companies is given in section 61, there is something which is referred to as rights issue in section 62. We have a bonus issue in section 63, and then reduction of share capital in section 66, and buyback provisions in section 68. So these are the 5 major ways by which there can be alteration of share capital. And in each of these scenarios, there are procedures which are laid down, which we are going to see one by one. Now, if you have a look at the first one, that is section 61, alteration of share capital, power of limited company. This we had already seen briefly, the provisions we have seen in our previous session, but again, we will repeat it because this is an important provision. So it says a limited company having a share capital may, if so authorized by its articles. So where you draw the power? You draw the power from the articles. So it must mention in the articles, if you are authorized, then you can alter the memorandum meeting to increase its authorized capital, share capital, by such amount as it thinks expedient. So if a company requires more capital, it may increase the authorized capital in case their authorized capital is less. They can consolidate and divide all or any of its share capital into shares of larger amount than its existing shares. So this can be done by the company by following the procedure. Provided that, however, whenever they are consolidating or dividing the shares, in that situation, they should keep in mind the rights of the shareholders so that their voting percentage don't change. If there is a voting percentage change, whenever they are making an alteration in the share capital, in that scenario, they have to reach out to the tribunal for their permission. And tribunal will then again ask all the stakeholders, and it will give a fair and equitable decision. And then only the consolidation and division can happen wherever there is a voting percentage change of shareholders, because it amounts to arrangement and it is a detailed change for which there is a requirement of permission from the tribunal. Company may also convert its fully paid up shares into a stock, or it may reconvert its stock into fully paid up shares of any denomination. And this activity also can be done by the company under the head alteration of share capital. It can subdivide its shares or any of them into shares of a smaller amount that is fixed by the memorandum. So, or however, subdivision of proportion between the amount paid. So it is here, it has to be a proportionate transaction. You cannot just, divide it. So wherever you are making a division, it has to be proportionate. And we had seen an example before, if you would say. So say, for example, I am holding, 10 shares, Hardik is holding 4 shares. And if there is a reduction of 50%, then for me, it will be 5 shares, and for Hardik, it will be 2 shares. So this is what is the subdivision of shares, which is talked about in Clause D. Clause E says about cancellation of shares, and the company may cancel the shares also, which at the time of passing of resolution in that behalf have not been taken or agreed to be taken by a person, and diminish the amount of its share capital by the amount of the shares so cancelled. So if the company cancels the shares, the capital will be reduced to that particular level. It is not issued to anybody else. The cancellation of shares shall not be deemed to be a reduction of share capital, however, because it will be covered under Section 61 provision, which specifically mentions about this fact in subclause 2, that it will not be considered as reduction in share capital. Now, there are different rules to alteration. So whenever there will be an alteration which has to be done under Section 61, there has to be passing a resolution in the general meeting, and generally it is a special resolution. And you can see on the right-hand side, there is a table which shows that which are the areas or which are the matters in which there will be a special resolution required in a general meeting. So you can see wherever there will be an issue of sweat equity shares, wherever redeemable preference shares. So these are the areas in which there is a requirement of a special resolution in the general meeting. Secondly, there will be a requirement of NCLT approval wherever there is a change in the voting percentage of the shareholders. whenever there will be a voting percentage change, there will be a requirement of going to the NCLT. Now, within 30 days of alteration, there is a requirement of a notice which must be given in form SH7 to the registrar, who will record the same and make necessary alteration in company's memorandum. This you have to go ahead with section 64. So section 64 talks about notice to the notice in case of alteration of share capital. And this you have to read with Rule 15 of the company's share capital and debenture rules, which I have already told you that you have to refer whenever you are reading this share capital chapter. So this is a pretty simple procedure. You need to, pass it to general resolution. Probably before this, there will be a board meeting also where they will decide alteration of share capital. And then thereafter general meeting. And then if there is a requirement of voting percentage change of shareholders, then they will reach out to the NCLT for approval. And then within 30 days of alteration, it has to be informed to the registrar, who will record this particular change in the records of the company. So I just told you about section 64. Let us have a look at it. Section 64, what it says. So it says notice to be given to the registrar for alteration of share capital. We have seen number of ways in which share capital can be altered. So where a company alters its share capital in any manner specified in subsection 1 of section 61, where we have seen there are multiple ways. An order made by the government under subsection 4 read with section 6 of the section 62 has the effect of increasing authorized capital of a company, or a company redeems any redeemable preference share. These are the situations in which a notice needs to be given to the registrar for alteration of share capital, where the company fails to comply with, and if people don't give notice to the registrar in these three situations, it is required to be given. If they don't give, then in that situation, the company or every officer who is in default shall be liable to a penalty of 500 rupees for each day during which such default continues, subject to a maximum of 5 lakh rupees in case of a company and 1 lakh rupees in case of an officer who is in default. So if you see here, this penalty amount has been reduced a bit from the previous regime. Again, we have already seen there is a decriminalization and ease of doing business, due to which a number of penalty have been punishment, which was in jail has been reduced to fine, and some fines have also been reduced. In certain situations, fines has been increased also. This rationalization has been done by, if I'm not wrong, in Jyoti Srinivas committee gave a big recommendation, and that recommendation was followed through later on, and then company's amendment was brought in to make these changes. Why I'm telling you this? Because towards your last in the unit, there is a topic which basically talks about punishments, So throughout these sections, 43 to 72, there are multiple penalties. My advice to you would be to properly remember them, prepare a chart. Okay. So keep the section and see what penalty is there and to whom, and prepare a chart. This will be easier for you to remember them and analyze them. And if you can also in the chart put one example for each of these, it will become easier for you to remember for your examination purposes, because during examination, it becomes very confusing. It was whether 5 lakh or 25 lakh or 1 crore, or maybe 6 months or 3 years or 1 year penalty. Okay. So this, I think you people have to remember this for your examination. Then you will see this is something which has been removed, subclause 2. This has been changed, as we have seen above. The changes already we have seen that. Now let us move ahead and talk about further issue of share capital, which is dealt with under section 62. So section 62 deals with further issue of share capital. How is it different than an IPO? IPO is a fresh issue, and further issue of share capital is to the existing shareholders or existing employees or to any other person. Generally, it is to the existing equity shareholders and to the employees. If you see here, it has a concept of preemptive rights. So basically, it says that preemptive rights, if you see it comes and generates from Transfer of Property Act. I recollect an instance, like say, for example, you are selling your land. The adjacent landholder gets a preemptive right to purchase that particular property. If he is willing to pay you the amount which you are asking for, then in that situation, you should sell that particular property to the person concerned rather than selling it to some outsider. This is what is the norm under the property law. Similar kind of a situation is here in further issue of share capital, wherein it is saying it is a preemptive right of existing shareholder in a corporation to purchase newly issued stock before it is offered to others. So the first option is given to the equity shareholders, existing equity shareholders. If they deny, if they don't take it, then it is passed on to any other person. This is how this operates. If we see here, the provision says where at any time a company having a share capital proposes to increase its subscribed capital by the issue of further shares, such shares shall be offered to existing equity shareholders. That is a rights issue to employees, that is called employee stock option, and to any other person for cash or non-cash consideration. In all situations, there is a requirement of special resolution, except in case of a rights issue where there is also a requirement of a offer through notice. So there is a requirement of a offer through notice which has to be made. In employees, there is no need for an offer because it is their employees and it is a limited number to whom it is issued, and it is a clear number which they are having. To any other person is a situation wherein the company wants to go ahead in situations where these two people are not taking, then they go ahead with any other person. Now, it specifically says to the persons who at the date of an offer are holders of equity shares of a company in proportion as nearly as circumstances admit to the paid off capital. So again, the proportion or pro rata basis is maintained in this situation. However, there is a bit of a flexibility by this term as nearly as circumstances admit. So it cannot be by way of a precision of a point, but they will try to, give it as near to this as possible. Okay. Now, if we move ahead and talk about example which has been dealt with in this case, is example number 19, and it says if a company announces 1:10 rights issue, it means that an existing shareholder can buy one extra share for every 10 shares held by him or her. Usually the price at which the new shares are issued by way of rights issue is less than the prevailing market price of the stock to encourage subscription. Definitely, because market price may be higher, so it may be issued at a lesser price to the existing equity shareholders. Now, let us move further and talk about this, public announcement. As I told you, there is a requirement of a offer through notice. So say this is just an example. This is Sangeeta Chemicals Limited. If you see here, this is the offer document which is released. This is the document. You can just see the issue, and here you can see about 86 lakh equity shares with a face value of 10 at a price of 18 per equity shares. Maybe this share may be trading at maybe 20 or maybe 25 or maybe at but they are issuing it at rupees 18 per equity share, including a premium of 8 per equity share. So here you remember share premium account. This 8 rupees will go in the share premium account for an amount aggregating up to this much lakhs on a rights basis to the eligible equity shareholders of so and so, in the ratio of 1 rights equity share for every 2 fully paid up equity shares. So your ratio is 1:2, held by such eligible equity shareholders on record date, that is May 7. So this is the record date, that is the date on which they have decided the issue. The face value of the equity shares rupees 10 and the issue price of 18 is 1.8 times of the face value. So this is the overall, offer. I would suggest these documents are all available on website. I would request you to at least have a look at one of the offer document of rights issue. This will give you a number of information, additional information to read and understand. Okay. Now, let us move further and go ahead with talking section 62. What does it say? And if you read further, it says the offer shall be made by notice specifying the number of shares offered and the limiting a time not being less than 15 days or such lesser number of days as may be prescribed. So under Rule 12A, I remember Hardik pointing out this rule. So you will see under this rule, it prescribes this period shall not be less than 7 days. This is a 2021 insertion, which has been brought down to 7. This can be brought down to 3 also or 4 also. It depends on the company. It depends on the central government and not exceeding 30 days. So it is the range is between 30 days, 15 and 30 days, and even lesser if rules permit that. If you see, this is the point. And in case of a private and a specified IFSC public company, it can be also less than that particular period, except that offer if there are 90% of the members have given their consent in writing or in electronic mode. If unless the articles of the company otherwise provide, the offer aforesaid shall be deemed to include the rights exercisable by person concerned to renounce the share offered to them. So here, if offer is declined by the existing shareholder, then at an intimation of such decline or after the expiry of the specified time, which is given to exercise the right, the board of directors may dispose of these shares. But this disposal cannot be disadvantageous to the existing shareholders of the company. So their fairness and equity has to be maintained here. As we have discussed, that is the basic premise of rights issue. Otherwise, the person has to go to the tribunal for getting the approval. Now, if we talk about the further provision, as I told you, there were three modes in which the share rights issue can be given. One we have seen on the equity shareholders. Now, their employees under a scheme of employee stock option subject to special resolution passed by the company may also issue the extra shares. And further, to any persons, if it is authorized by a special resolution, whether or not those persons include the persons which are referred to above, A and B, either for cash or consideration other than cash, if the price of such shares is determined by valuation report of a registered valuer. So this will be just like other kind of a issue, so it will be offered to the persons, any persons, if it is authorized by special resolution. Now, if you see the notice which has to be given for rights issue has to be dispatched through registered post or speed post or through electronic mode nowadays, and even courier and other mode of proof of delivery has also been added to this. Nothing in this section shall apply to increase of subscribed capital of a company caused by the exercise of an option. So here debenture, if debenture is converted, then that will not be considered as change in the share capital, provided that the terms of such debentures or loans have been approved before such issue. So it cannot be a situation that you have issued a debenture without such terms and condition, and later on you increase the capital and this. Because see, information is the key. Point is that whenever you are issuing such kind of a debentures, that information needs to be told to the people, existing shareholder or debenture holders. So there are some notes which you can see in your document, which is there, which basically tells you, give me a second. I just wanted to see your query pad also. In the meantime, you can read the note. Okay, not many queries in the query pad. So reduction capital is okay, Kiran Kumar, the reduction in capital when we are talking about it is for the paid up capital, not for authorized capital. Authorized capital is the outer limit, outer circle, which we have seen. So it is all about paid up capital. Okay, so this question I'll take later. Whether there are any question. Yes, it is a special resolution. Only resolution is mentioned, but it is a special resolution wherever there is a change or alteration in share capital. Okay, now let me move further and go ahead. So you have seen the note. So it tells you that the term employee stock option means option given to the directors or employees. I think you must have read this by now. You also pay attention to the listed companies. In case of listed companies, the conditions prescribed by SEBI share-based employee benefit regulation applies, and it has to be observed. Now, Section 62 further says dispatch of notice to the existing shareholders, and it says notice shall be dispatched through registered post, electronic mode, or courier, or any other mode having proof of delivery to all the existing shareholders at least 3 days before opening up of the issue. And in case of a private company, any shorter length, less than 3 days of notice period shall also be acceptable if 90% of the members have given their consent in writing or in electronic mode for such other period. So you have an example in your module, example number 21. It is an interesting example. And if you see the solution, it clearly says notice of rights issue dispatched to holders to the registered email ID in 2 days advance to opening of an issue. Out of this much member holding 94% of the share acknowledges the mail and consent for shorter length. Despite the mode of dispatching notice and furnishing consent of members to shorter length is valid, the notice stands invalid because at least 90% members shall give their consent to shorter length of notice, whereas in given case, nearly 72.70% have given consent, hence it is not valid. Your number of members is to be considered, not their holding. So you don't have to look at their holding, but you have to look at the number of the members. Now, further, if you see, it gives non-obstante clause. And it says, notwithstanding anything contained in subsection 3, where any debentures have been issued or loan has been obtained from any government by a company, and if that government considers it necessary in public interest to do so, it may order direct such debentures or loans or any part thereof shall be converted into shares. So this is with reference to government, right? So government companies have been given this certain exemption, provided that where terms and conditions of such conversions are not acceptable to the company, it may within 60 days from date of communication of such order appeal to the tribunal, which shall be hearing company and the government pass such orders as it may deem fit. In determining the terms and condition of conversion under subsection 4, the government shall have due regard to the financial position of the company, the terms of issue of debentures, etc. So this is an extra power given to the government to intervene in situations wherever it is required, where the government has by an order made directed the debenture or loan or any part thereof shall be converted into shares in a company, and where no appeal has been preferred to the tribunal, where such appeal has been dismissed, or memorandum of company shall, where such order has been effected, increase the authorized capital of the company stand altered, and the authorized share capital of the company shall stand increased by an amount equal to the amount of value of shares. Basically, it is saying that either the government can say that, okay, fine, convert these debentures to the share, and it will not be considered to an alteration of share capital, or and further, if, say, for example, the tribunal does not agree on the challenge or there is a issue around it, then in that situation, they will increase the authorized share capital so that the issue becomes legal. So subclause 4, 5, and 6 deals with the intervention of the central government in case of alteration of share capital. If you see, there are certain exceptions which are provided. Section 62 shall not be applicable on conversion of debenture loan equity shares. So conversion of debentures or loan into equity shares leads to increase in subscribed capital of the company. And subsection 3 of the 62 says that it shall not be applicable to the following situations: that those terms and conditions under which such conversion took place must be approved by the company in general meeting through special resolution and prior to issue of debenture and grant of loan. So you have to have the approval of the terms and condition of this change before you issue that particular debentures. You cannot do it subsequently. Okay. There is also a requirement of compulsory conversion of debentures loan from government. So here it says, so we have seen that already, so subsection 4, I gave you the example just right now, and there are 4 conditions which must be satisfied. So government conversion of debentures issued to government or loans issued by government to company, either full or in part thereof into shares of such company, if that government considers it necessary in public interest to do so. On such terms and condition, government may, say that such debentures or raising of such loans do not providing for an option of such conversion. Now, if you see proviso to subsection 4 provides remedy to company against hostile conversion. So government, if say, for example, converts, then they can reach out to the tribunal within 60 days from the date of communication of such order, and the tribunal may pass such conditions as may be required. In subsection 5, government shall be considering the following conditions while allowing that particular conversion, that is financial position of the company, the terms of the issue, the rate of interest payable, all these things have to be considered by the government. Subsection 6 states that pursuant to the order of government of conversion of debenture and loan into equity share, authorized capital of such company shall stand increased by an amount. So this we have already discussed in our previous session. Any question till this point, any one of you? If you have a question, please ask at this point. Any question? Yes. Preemptive right, Tambeshwari, is a concept where you offer the existing share or rights issue to the existing shareholder rather than opening up with outsiders. Okay. Okay. Yes, Kiran Kumar, go ahead. You can speak. Open your mic and speak.
Sir, for doing this additional issue of shares, that special resolution is required like that, it was informed. And there also it is there that electronic ballot is also specified. Once
Yes.
electronic ballot is done, whether again general meeting is required or electronic ballot is sufficient?
No, electronic ballot is part of that particular voting exercise, no? So electronic ballot does not mean that
Subsequent general
everybody will
meeting,
be...
I think, does not serve any purpose, no? That's what I must.
No, meeting. See, during meeting also, there will be either a proxy which has to be, nominated by the shareholder, or they can do it by electronic ballot.
No, this proxy is not allowed, no, sir. Electronic ballot is mandatory, no, sir, nowadays for limited companies.
Okay, so if it is a mandatory situation, then it has to be done. But see, meeting by whatever mode it is. So it can be a hybrid mode, it can be a online mode, it can be the physical mode. So this section is not telling anything about that, but it is saying that there has to be a special resolution. That means there has to be a consent.
Once that ballot work is over, I think this general meeting will not serve any purpose that I'm telling. It will not serve any purpose that I'm.
No, but meeting has to be done, no? Either by electronic mode or by physical mode. This is what it is saying.
Okay.
Yeah. Right. Any further questions? Any one of you? Hostile conversion. Hostile conversion refers to a situation where central government says that, okay, fine, convert these particular debentures into equity. Okay, that is the hostile conversion. Refer to section 62.456. This is what dealing with hostile conversion. Yes, you can ask, Hardik. Let us close that so that the questions are over. Go ahead. You can use your mic.
Sir, I have a question in relation to if, sir, in unpaid calls, if the company asks for calls and the shareholder does not pay it,
Yes.
can the company adjust it from the dividend of the that shareholder?
No. There is no provision of adjustment of the dividend. Either they have to pay or the company has got the right to cancel their shares, forfeit their shares. These are the rights which company has.
Okay, sir. They cannot adjust it from dividend.
No. Dividend is a completely different thing that cannot be adjusted there. Too far,
Okay,
so far as my knowledge goes.
Okay, sir. Thank you, sir.
Yes. Yeah. Any other question? Okay, then let us proceed further. Today we have to cover many things. Okay, we are not going to take break today. We will go continuous basis. That is why per section I am asking you questions so that we can close it there itself. Now let me proceed further. We are moving ahead with bonus issue. Now, if you see section 63 talks about bonus issue, and there is an example of bonus shares. If a company decides to issue bonus share in the ratio of 1:2, I think section 63 we have already dealt with in our previous session. We have seen these sections. We have seen this section already. But just I wanted to touch upon this Supreme Court decision, which has been referred to in your module, which actually tells you the nature of the bonus shares. And we have already talked about this capitalization term many a times. We cannot capitalize the free reserves to issue bonus. This we have discussed. This is a restriction. But capitalize The profits can be always capitalized for transferring an amount equal to face value of the shares from its reserve to the nominal capital. This is what is permitted. If you see in the Supreme Court decision also, this has been talked about. So bonus share is an accretion. Bonus share is issued when the company capitalizes its profits by transferring an amount equal to face value of the shares from its reserves to the nominal capital. In other words, the undistributed profit of the company is retained by the company under the head of capital against the issue of further shares of its shareholders. Bonus shares have therefore been described as a distribution of capitalized undivided profit. This is what is the bonus share. So basically, this is a situation prior to declaration of dividend. So instead of giving the dividend, what they do is basically they issue a bonus share. So a share certificate is issued, money remains with the company for its purpose. So this is what is the requirement. This is how the company tries to manage its finances. So in case of issue of bonus share, there is an increase in the capital of the company by transferring of an amount from its reserves to capital account and thereby resulting in additional shares being issued to the shareholders. If you see, bonus share has to be always issued in proportion of the existing shareholder. So, for example, if a company decided to issue a share in the ratio of 1:2, one for every 2 shares held, then the holder of 100 shares of a company will get 50 bonus shares without making any payment. There his holding of shares will now be 150 instead of 100. This is the overall perspective and requirement of bonus shares. I hope there is no question on bonus shares. We will move ahead with next section, that is reduction of share capital. It is again an important section. It says reduction of share capital. Now, reduction of share capital can happen by way of multiple ways, and section goes like this, and it says subject to confirmation by the tribunal on an application by the company, a company limited by shares or limited by guarantee and having a share capital may, by a special resolution, reduce the share capital in the following manner, in any of the following manner, right? However, you must notice that application to the tribunal is important. Reduction of share capital is a serious issue. You cannot just reduce the share capital without the permission of the tribunal. First, how they can reduce? They can either extinguish or reduce the liability of any of its shares in respect of share capital not paid up. So say, for example, there are paid up capital is about 7 rupees out of 10 rupees face value shares. Company may decide that, okay, we reduce the liability for 3 rupees from the shareholders. So that becomes fully paid up at 7 rupees itself. However, if you see in the books, the 3 rupees will be not shown unless it is extinguished or reduce the liability on its shareholders. So this is one way. Second is either with or without extinguishing or reducing the liability on its shares, they may cancel any paid up share capital which is lost or is unrepresented by available assets, or pay off any paid up share capital which is in excess of the wants of the company, alter its memorandum by reducing the number of amount of a share capital of its shares accordingly, provided that no such reduction shall be made if the company is in arrears in repayment of any deposit accepted by it, either before or after the commencement of this act or the interest payable thereon. So the basic norm for reduction of share capital is that the company should be solvent. It should not be in a situation where they have defaulted in paying the debt, or they have not made the repayment on the preferential shares or maybe debentures payments which are required to be made. So this is the primary requirement in case of a reduction in share capital. Let us look at section 66, and subclause 2 talks about the notice to the tribunal. So the tribunal shall give notice to wherever there is an application which is made in 66(1), tribunal will give a notice to the following entities for their consideration. The first one is central government. This power is with regional directors, to the registrars and the Security Exchange Board of India in case of listed companies, and the creditors of the company needs to be given a notice. Tribunal shall consider the representation, if any, made by them within a period of 3 months from the date of the receipt of the notice. Now, where no representation has been received within the said period of 3 months, it shall be presumed that there is no objection to this particular reduction. Now, considering representation is statutorily required, not admitting it in full. So this is how the notice thing works. Every stakeholder needs to be informed. Further, after hearing, the stakeholders, the tribunal may pass an order. So the tribunal may make an order confirming the reduction of share capital on such terms and conditions as it deems fit, only if it is satisfied that the debt or claim of every creditor of a company has been discharged or determined or has been secured or his consent is obtained. These are the four things which needs to be looked at. The accounting statement proposed by the company for such reduction is in conformity with accounting standards, which is specified in section 133 of the Companies Act. Now, the question here is, this question is to you people, how tribunal determine that whether accounting treatment proposed by the company for such reduction is in conformity with the accounting standards specified in section 133 or not? You can use your chat box and give me the answer. Auditor's report. Okay. Yes. Any more answers to this question? Okay. Okay. Yeah. Any more answers? I think we are having 56. I am seeing. Okay. Certification from Chartered Accountant. Okay. Very nice. Let us see. Yes. Company's auditor has to be filed with the tribunal. Good. Very nice. All of you are on the path of becoming the chartered accountants. You will be also issuing this certificate in future. Moving ahead. Now, section 66, subclause 4 says the order of confirmation of reduction of share capital of the tribunal under subsection 3 shall be published by the company in such manner as the tribunal may direct. So there may be a requirement of a publication also. Generally, it happens in the newspapers, business newspapers, on the website. The company shall deliver a certified true copy of the tribunal's order and minute approved by the tribunal showing the following things. So what needs to be mentioned? The amount of share capital, the number of shares into which it has to be divided, the amount of each share, and the amount, if any, at the date of registration deemed to be paid up on each share to the registrar within 30 days of the receipt of the copy of order, who shall register the same and issue a certificate to that effect. Nothing in this section shall apply to buyback of its own securities. So for buyback, there is a separate provision which we are going to see just now. A member of the company, past or present, shall not be liable to any call or contribution in respect of any share held by him exceeding the amount of difference, if any, between the amount paid on the share and the reduced amount, if any, which is to be deemed to have been paid thereon. So we gave an example, 10, 7 out of 10. So for 3 rupees, if it has already been reduced, the existing members will not be called to pay the remaining 3 rupees. It will be considered, it will be deemed to have been paid thereon, as the case may be, and the amount of the shares as fixed by the order of reduction. So this is the subclause 7. Subclause 8 of 66 says, where the name of any creditor entitled to object to the reduction of share capital. This is a situation where inadvertently or by design, a creditor's name has been missed to whom they could have heard, but they have not heard. Then in that situation, within the meaning of subsection 2 of section 271, they can, the amount paid, debt or claim commit a default within the meaning. So this will be considered as a default under section 6 of the Insolvency and Bankruptcy Code in respect of the amount or debt. So this is a very precarious situation. So one has to take care that or no creditor is left out while this particular reduction in share capital is happening. There, say is there. And this is what it says. Let us look at the example. 25. It says name and interest of Mr. Nilanjan Iyer, a creditor of Modern Furniture Limited, has been kept outside the list of creditors while company went into reduction of its capital. Later, when Mr. Iyer came to know about this, he wished to take legal action against the company under IBC as limitation period is not expired yet. Mr. Iyer is entitled to do so. Exclusion of his name constitute as offense under IBC as well, right? So this is what is a provision. So as I told you before, reduction of share capital is a very important provision, and there are liabilities associated with it for the people. Now, liability of officers, as I just said, let us look at the liabilities of reduction of share capital. Nothing in subsection 8 shall affect the rights of contributors among themselves, and 10 says, if any officer of the company knowingly conceals. Now here the word knowingly is very important. So mens rea or intention is very important. So people may put up a defense that they didn't knew or they didn't had knowledge about it. So it is not by default a default. So knowingly conceals the name of any creditor entitled to object to the reduction, knowingly misrepresents the nature or amount of debt or claim of any creditor, or abets or is privy to any such concealment or misrepresentation as aforesaid, he shall be liable under section 447. Right? So this is section 66. Now let us look at section 67. 66 liability is clear, I hope, to you people. This amount of, the amount of fine and this has been taken away now. It is only the liability of corporate fraud, which is actually a bigger liability. Now, restriction on purchase by company or giving of loans by its purchase of shares. Section 67 says basically that company cannot, give money to fund money to purchase the shares of its own shares or its holding shares of its holding company. So section 67 says no company limited by shares or by guarantee having a share capital shall have power to buy its own shares unless the consequent reduction of share capital is effected under the prevention provisions of this particular act. No public company shall give, whether directly or indirectly, and whether by means of loan, guarantee, the provisions of security or otherwise, any financial assistance for the purpose of or in connection with the purchase of subscription to be made by any person for any shares in the company in its holding company. So this is the restriction. There are some exceptions and there are also punishments associated with it. So let us look at the exemption. The exemption could be the situation where the lending of money by a banking company in ordinary course of business. So you have to understand what is an ordinary course of business. If the banking company is giving money to purchase its own shares, it is not ordinary course of business, right? So that is not covered here. Now, if you see the B provision, it says the provision of a company of money in accordance with any scheme approved by the company through special resolution and in accordance with such requirement as may be prescribed. Refer to Rule 16 for this. For the purchase of subscription of fully paid up shares of the company or holding company, if the purchase of the subscription of shares held by trustees for the benefit of employees or such shares held by the employee of the company, that is not included here in this situation. Third is to the giving of loans by a company to persons in the employment of a company other than its directors or key managerial person for an amount not exceeding their salary or wages for a period of 6 months. So say, for example, there is an employee stock option for the purchase, and if the employees are given a loan equivalent to the 6 months wages of the employees, if they utilize that money to purchase the employee stock option, that will not be considered as the giving loan for purchase of shares. Now, provided that disclosures in respect of voting rights not exercised directly by the employees in respect of shares to the scheme shall be made in the board's report. Nothing in this section shall affect the right of a company to redeem any preference share issued by it under this act or any previous company law. Okay, so redemption of preference shares is permitted under subclause 4. Penalty, if you look at it, there are penalty if there is a default in this section 67. So every officer of the company who is in default will be liable for imprisonment for a term which may extend to 3 years and a fine which shall not be less than 1 lakh rupees but which may extend to 25 lakh rupees. And for company, fine which shall not be less than 1 lakh rupees but may extend it to 25 lakh rupees. So you can see penalty is very heavy because this is breach of fiduciary duty. So if someone breaches this particular fiduciary duty, utilizes the company funds to purchase the company shares, and this is illegal. This is not right. Okay. Next. Section 67 does not apply to private companies if not defaulted in filing its financial statement under section 137. So there is a condition. So if private company which are under default, 67 applies. Otherwise, it does not apply. Specified IFSC public company in whose case all the following 3 conditions are fulfilled. That is, it is in whose share capital no other body corporate has invested. If the borrowing of such a company from banks or financial institution or any body corporate is less than twice its paid up share capital or 50 crore rupees, whichever is lower, and such a company is not in default in payment of borrowing subsisting. So this is a additional, what you can say, advantage for a private company or specified IFSC public company, under the head of ease of doing business. Section 67(1) also does not apply to Nidhi companies when shares are purchased by the company from a member of his ceasing to be a depositor or borrower, and it shall not be considered a reduction in share capital under Section 66. While complying with such exception, the Nidhi company shall ensure that interest of their shareholders are protected. This is the requirement. These are by way of different GSRs which central government has given to clarify the situation relating to lending of money or giving money to purchase its own shares of a company or its holding company. Now, if you see, now we are moving ahead with buyback of securities, but before that, I will open the floor again for questions and anyone which has a question till this point. Yes, yes, Sainath, it can be financed by other finances. Definitely, yes, it can be done that. Anyone else has any other question? Knowingly means connivance. Yes, it means mens rea. It has an intention to it. So you have to prove that, yes, he did it knowingly. Privy basically is that they are party to it. Okay. Abets means that they are instigating it or they are the designer of that particular thing. That is called abets. Okay. I think I have answered all the question. Okay, Tanu, you can ask this MCQ 1. What is that? You have been asking so many times. Go ahead. Regional director Tambeshwari is a person. We have, I think, 7 regional directors. So ROC, there are 25 ROCs, and these ROC, above the ROCs are regional directors. Okay. Like, for example, South region, for example, Northern region, like that. He is a superior to ROC. Okay. 2 or 3 or 4 ROCs together constitute regional director. Yes, Hardik, go ahead. Please ask the question.
Sir, sir, in the deduction, sir, in section 67, purchase of shares, sir, disclosure in respect of voting rights not exercised directly means?
No, come again.
Sir, in section 67, there was like a provision of money for purchase of fully paid up shares in a
Which
company or
clause you are, which subclause you are referring?
sir, provided.
Provided that.
Sir, the
Provided that disclosure in respect of voting rights not exercised directly by the employees in respect of shares to which the scheme relates shall be made in the board's report in such manner as may be prescribed.
this means, sir, that employees are not exercising. Someone else is exercising on their behalf.
Yes.
Okay, sir. And sir, is there any limit for valuation of shares?
Which one?
For value of shares that must be given to them?
No, no, no. In this, there is no limit. No, this is the thing which we are talking about, the purchase of shares by employees, right?
So any limit can be given to employees.
Yes, yes. There is no limit as such, but again, you have to refer to the rules if there are any limits there.
Okay, sir.
Yes. Okay. Tanu, I have to refer to your module then. So wait for your answer then. I will have a look at MCQ and what is that. Okay. Next, any other question on this 66 and 67? Okay, let me move further and talk about the next session. Okay. So we are talking about 68, which talks about buyback of securities. Now, first of all, you have to find that what are the sources of buyback of shares. Okay. So the company may purchase its own shares or other specified securities. The purchase should be made out of its pre-reserves or securities premium account or proceeds of the issue of any shares or other specified securities. So this is what is the requirement. However, buyback of shares or other specified securities cannot be made out of the proceeds of earlier issued shares or other specified securities of same kind. So there is a restriction on utilization of funds but you can only purchase out of these three sources: free reserve, securities premium account, and proceeds of the issue of any shares or other specified securities. Subclause 2 says about conditions of buyback, and it says the company may purchase its own shares or other specified securities if met with the following conditions. That is, buyback must be authorized by its articles, and there has to be a special resolution authorizing buyback is passed in the general meeting of the company. However, special resolution may not be necessary where the buyback is not exceeding 10% of the total paid up equity capital and free reserves of the company, and such buyback has been authorized by the board resolution passed at its meeting. So till 10% of the total paid up equity and free reserves, there is no requirement of a special resolution. Okay? It can be done by way of a board resolution itself for buyback. Section 68 further says that no offer of buyback shall be made within 1 year. Okay, reckoned from the date of closure of the preceding offer of buyback. So there is a cooling off period of 1 year between the one buyback and second buyback. Free reserves include the securities premium account. This we have already seen. The amount involved in buyback should not be more than 25% of the aggregate of paid up capital and free reserves of the company. Further, in case of buyback of equity shares, the maximum limit is 25% of its total paid up equity capital in a financial year. So you cannot buy back more than 25% of the total paid up capital, equity capital in a financial year. After the buyback, the ratio between the debts secured and unsecured owed by the company should not be more than twice the paid up capital and free resources of the company. That is, central government may prescribe a higher ratio for a class of companies in this situation, but otherwise it is twice the paid up capital and free resource of the company. Shares or other specified securities for buyback shall be fully paid up shares. Further, the buyback should be in accordance with Rule 17 of the company's share capital and debenture rules. But in case of listed share capitals, shares, you have to see the regulations made by Securities and Exchange Board of India. So SEBI has a specific SEBI buyback regulations. So you have to fulfill that particular SEBI buyback regulations. Now let us look at the procedure for buyback. So in terms of procedure for buyback, you will see subsection 3 talks about procedure for buyback. And it says the notice of the meeting at which a special resolution is proposed to be passed shall be accompanied by an explanatory statement. And this explanatory statement, we have seen this many times, right? In our previous sections also, we have seen an explanatory statement. So generally, the objective of this explanatory statement is disclosure as much as possible. So it is what disclosures you have to give. You have to say a full and complete disclosure of all material facts, the necessity for the buyback, reason for the buyback, the class of shares or securities intended to be purchased under the buyback, the amount to be invested under the buyback, and the time limit for completion of the buyback. So this is what is the requirement under procedure for buyback. Rule 17(1) of the company's share capital and premium debenture rules 2014 specify list of 14 matters regarding which particulars shall be stated in explanatory statement. And I have already given you an example. So you can refer to a notification of buyback issued by SEBI. There also you will get a complete detail what information are required to be shared. It tells many information which requires to be shared. This is an additional information for you. So you must read if you want more information on this. Now, securities to be purchased under buyback, it says the buyback may be from the existing shareholders or security holders on a proportionate basis. So that can be done or by way of an open market. So there can be a buyback from open market also, or the securities issued to employees of a company pursuant to a scheme of stock option or sweat equity. So these are the three sources from which buyback can happen. One, existing shareholders or security holders. But whenever you are going ahead with this kind of a buyback, you have to do it on a proportionate basis. You cannot say that, okay, I will purchase only from A and not from B. Second, you can do it from an open market. Again, this is a situation where there is an openness. Similarly, securities issued to the employees of the company. Here also, you cannot choose between employee A and B. You have to give it in a open basis, right? So in all these situations, there has to be an open notification for buyback. Whenever a company goes for a buyback, there is a requirement of declaration of solvency. because buyback basically means reduction of share capital. So in that situation, creditors need to be informed that why there is a buyback, and there is a requirement of meeting the debt. So if there is a default in payment of debt, then it will not be permitted. Okay. So there is a requirement of declaration of solvency, and it says a declaration of solvency has to be filed before the resolution for buyback is implemented with the registrar and also with SEBI if such shares of such company are listed on any stock exchanges. This is the requirement of declaration of solvency. Declaration of solvency has to be in form SH9 and verified by an affidavit stating that the board of directors has made a full inquiry into the affairs of the company and have found that it is capable of meeting its liabilities and will not be rendered insolvent for a period of 12 months from the date of declaration. So this is the requirement of declaration of solvency. It has to be signed by at least 2 directors of the company, one of whom should be managing director, if any. And the time limit for completion of buyback is basically 12 months. So every buyback has to be completed within 12 months from the date of passing the special resolution or board resolution authorizing the buyback. And you have already seen that there is a 12-month cooling off period also. So once the buyback completes, after that, within 12 months, the next 12 months, there cannot be another buyback. What happens to the bought back securities? So it may be extinguished. So that is the provision extinguishment of securities it is saying. And it says wherever company buy back its own securities or other specified securities, it shall be extinguished and physically destroy the shares or securities. So bought backs within 7 days of the last date of completion of buyback. So it is not a situation that you buy back the securities and issue it to someone else. You have to cancel it. So that is what is called extinguishment of securities. I have already talked about cooling off period, that is 6 months. I'm sorry, I told 12 months before. It is 6 months. Where a company completes a buyback of its shares and other specified securities, it shall not make further issue of same kind of shares or other specified securities within a period of 6 months. So this is the requirement under section 68. The restriction applies only to the type of securities bought back. The company is free to issue other types of securities. So this is also a very interesting one. If buyback is on preferential shares, then you can issue equity. If it is equity shares, then you can issue preferential shares. This is what it is saying. Register of buyback. There has to be a register of buyback, and that has to be maintained in the form SH10, which includes shares or securities show bought, consideration which has been paid for shares or securities bought back, date of cancellation of shares or securities, date of extinguishing or physically destroying the shares of securities, such other particulars as may be prescribed. So rules prescribe some other procedure which needs to be followed also in this situation. Definitely all these procedure of alteration of capital requires information to the ROC. So here return of buyback in the form SH11 along with the fee shall be filed with the registrar and also SEBI in case of listed companies, and containing such particulars relating to buyback within 30 days of such completion. So within 30 days, this information has to go. If people don't follow, there is a penalty for default, and the penalty is 1 lakh rupees minimum and maximum up to 3 lakh rupees for both company and every officer of the company who is in default. So this is about section 68. Let us look at section 70 also, then we will have questions. Prohibition for buyback in certain circumstances. So section 70 talks about prohibition of buyback, and it says that no company shall directly or indirectly purchase its own shares or other specified securities through any subsidiary company, including own subsidiary company. So it has to be a direct purchase. You cannot do it through a subsidiary, through any investment company or group of investment companies. So it has to not be through any investment company. If a default is made by the company in repayment of deposits or interest thereon, or redemption of debentures or redemption of preference shares, payment of dividend or any shareholder, or repayment of any term loan or interest thereon to any financial institution or banking company, then the companies are prohibited from buying back these securities. So subclause C basically talks about solvency, right? So if they are not solvent, then in that situation, they cannot buy back the securities. Further, subsection 2 prohibits the company from directly or indirectly to purchase its own shares or other specified securities in case such company has not complied with the following provisions. That is, they have not filed the annual report under Section 92. They have not declared and declaration and payment of dividend has not been done in Section 123. They have a punishment for failure to distribute dividends under Section 127. And there are, failure or misappropriation or mismanagement under Section 129 that relates to financial statement. In those situations, there is a prohibition for buyback of securities by the companies. They cannot do that. Then, if you see these, there are certain sum which needs to be deposited in capital redemption reserve account. So where a company purchases its own shares out of free reserves or securities premium account, a sum equal to nominal value of the shares so purchased shall be transferred to the capital redemption reserves. That is called CRR account, and details of such transfer shall be disclosed in the balance sheet. The capital redemption reserve account may be applied by the company in paying up unissued shares of the company to be issued to members of a company as fully paid bonus shares. This is Section 69. So now we are done with alteration of capital. We will move into the next section, that is debentures. But before we move to the next section on debentures, I would like to hear any questions you have. For specified security, Tambeshwari, you have to refer to rules. So wherever there is something which is referred to as specified, the government retains the power to specify those securities. Okay. So you have to see which securities have been mentioned there, refer to the rules there. Okay. I think rule 17 we have talked about in this case, refer to that. Fully paid up, Tanu, fully paid up shares can be bought back. Okay. To buy back. Yeah, let me look at the example one in the meanwhile. Someone asked me that. But in the meanwhile, if you have any questions, please, you can use your mic and speak, okay, for questions. Let me have a look at the other questions. Move ahead. For any questions, you can use the mic. Let me open the module and let us see. MCQ 1. MCQ 1 I have already answered actually. That was there in my first slide. Which MCQ you are referring to? Tanu, can you tell me? If you can tell me the page specifically in your module. Four 4.87. Okay.
Sir,
Go ahead, Hardik.
sir, in conditions, I have one doubt.
Hmm.
Sir, in conditions, it is written the amount involved in the buyback should not be more than 25% of the aggregate of the paid up share capital plus free reserves of the company. Further,
Yes.
in case of buyback of equity shares, the maximum limit is 25% of the total paid up equity capital. So, sir,
Yes.
this means that the buyback of equity capital should that 25% should be in the limit of the total 25%.
Yes.
Sir, am I correct? If-
Yeah, that is what let me see what you're saying. You are referring to buyback percentages, right?
Yes, sir.
Okay. So C says the amount involved in buyback should not be more than 25% of aggregate of paid up capital and free reserves of the company. Further, in case of buyback of equity shares, the maximum limit is 25% of its total paid up equity capital in any financial year, right? So for equity shares, there is an additional requirement in a financial year. So here qualifying term is in a financial year, not any other term, right? So what it is saying, if it is a equity shares, the maximum limit would be 25% of total paid up equity capital in any financial year.
So, sir, this means that if I have
This
a hundred,
excluding this is excluding the reserves, right? So first is including the reserves, second one
yes,
is
sir.
excluding the reserves.
Sir, if I have a total share capital of 100 rupees,
Right.
including 20 rupees at as equity shares, 20
Hmm.
rupees at as debt, and remaining as
Hmm.
preference.
Right.
Then, sir, if I have the power to buy back, then I can buy back 20 rupees,
Yes. You are
25%.
right. You are right on that count. You have to see 25% of the total paid up equity capital.
And sir, overall, it should be under the limit of 25% of the total paid up capital plus free reserves.
Right. Very true. So if say, for example, your capital paid total paid up capital and free reserves is 100, then it cannot go more than 25% of that. Okay. And
Okay,
in
sir.
that, if your equity is, say, for example, 40, then it has the next subclause says 25% of that 40.
Okay, sir.
Right. So you have understood it right. Yes.
Sir,
Any other question?
sir, one more thing I want to tell. Sir, that 1 year
Yes.
and 6 months you have written correctly in the PPT. Sir, one
Ah,
year is for the buyback, a cooling off period, and 6 months is for the issue of shares. Cooling period.
yes.
There are two cooling period. You said na
Okay.
that it was.
Yes. 12
So
months and 6 months, which we have referred to. Yeah.
yes, sir.
Right. Okay. Now let me see this Sarvodaya or urban, but which I am 4.87. There is the Sarvodaya urban. I am not able to find that particular case study where you are referring to. 4.87. I am there. 4.87. There is a descriptive question, and there is modern furniture's case number 3. First one is the Mr. Bahu, which we have already discussed. I don't know which document you are referring to. Okay, now let me move further. Any other question anybody has, they can raise their hand and ask. Okay, if you don't have any questions, we will begin with debentures then. Right, so let me again share my slides so that you are
हेलो
able to
सर
see. Yes, go ahead.
ये जो एमसीक्यू है ना वो जनवरी और मई 25 के मॉड्यूल में है
अच्छा, जनवरी और मई 25 के वो ग्रीन वाला मॉड्यूल है, उसमें है।
यस सर
हाँ, वो ग्रीन वाला मॉड्यूल आप रेफर नहीं कर रहे ना, हम ब्लू वाला मॉड्यूल रेफर कर रहे हैं।
ब्लू वाला ही है ये जो हमारी बुक है वो जून 23 में एडिशन रिप्रिंट हुई थी उसमें है।
आप अगर वो क्वेश्चन को रीफ्रेम करके आप पूछ सकते हैं यहाँ पे, तो पूछिए, मैं आंसर देता हूँ, क्योंकि वो मुझे मिल नहीं रही है।
ओके सर
बताइए कि क्या है, आप क्या पूछना चाहते हैं, क्या
ओके
क्वेश्चन क्या है।
वो एमसीक्यू है एक अभी
अच्छा, आप उसको ना एमसीक्यू को पढ़ के उसका जो समरी है अगर वो बता सकते हैं तो मैं अभी आंसर देता हूँ, नहीं तो फिर आप उसको पढ़ेंगे तो समझ में आएगा फिर आपको।
अच्छा सर मैं पढ़ती हूँ।
पढ़िए क्या बोलता है।
सर्वोदया अर्बन निधि लिमिटेड हैज ₹40 crore and 6 crore as paid up in equity share and preference share capital respectively. Balance in return earnings account is ₹2.4 crore. Equity share capital having face value of ₹10 each, while preference share has face value of ₹100 each. Mr. Surya and Mr. Chandan has own 1 lakh 11 lakh 20,000 and 5 lakh 60,000 shares respectively. In context of resolution placed before the company which directly after affect the rights attached to his preferences. The voting right to Mr. Surya and Chandan in percentage the term shall be. इसमें
ओके सो हियर देखिए बेसिकली आपको वो परसेंटेज जिस परसेंटेज में उनका शेयर्स है ना प्रेफरेंस शेयर्स और इक्विटी शेयर्स का उस परसेंटेज में उनका वोटिंग राइट होगा ये बता रहे हैं वो। तो आपका जब ऑप्शन देखेंगे तो उस ऑप्शन में उसके हिसाब से कैलकुलेट करके आपको आंसर मिलेगा।
ओके सर
ठीक है
यस
You're right. Okay. Next, we will move ahead. Anybody has any other question? Anyone? If you have any question, please unmute yourself and speak. If you don't have, then we will move ahead with our presentation. That is yes.
Yes, sir, this is ICAI. In case
Yes.
of
Go ahead.
buyback of shares, what if we know that in case of listed companies they can buy in the market. What if they are unlisted class of shares? How the
No,
buyback can be done?
come again with your question, please.
Sir, in case of listed shares,
Hmm.
the buyback can be done by purchasing the open market, secondary market.
Yes.
What if the shares were unlisted?
Later on.
How the buyback can be done? How the
No,
buyback
buyback
can be
can
done,
be
sir?
done by directly purchasing from the equity shareholders in case it is not listed.
So, okay, then their consent is required, right, sir?
No, obviously consent would be required. Somebody who is going to sell the shares, you have to purchase it by way of consent only, no? You cannot sell it. You cannot purchase it without their consent, no? In the open market, you can
Okay,
purchase.
sir. Is there
But
any
there also
process?
there is a consent, isn't it? No security can be purchased without a consent. In open market also there is a consent. Seller has a consent.
Yes,
Then buyer purchases it.
but there is a consent on this. In open market, there will be a stockbroker, a middleman, and there will be price setting procedures, everything. But how does the
Irrespective of that, there is a consent to sell the shares, no?
yes, sir. In that, in case of unlisted shares, who is going to fix the price? Is that equity share
Okay, you are talking about what
holder
is the
or it's
price
a
at which it
market?
will be. It will be on the basis of, see, for example,
How?
in that situation, if it is a buyback of shares, we have already seen that there has to be a equity in this situation. So you have to inform all the shareholders of that class that yes, there is a buyback going to be there by the company, and you have to give proportionate, equal opportunity to everyone. Are you
Sir,
getting
in
that?
practicality, will that be taken place, sir? Because how could a board of directors, management know that a particular shareholders are willing to share their price,
No,
and how could
they will offer it.
how could this?
No, see, in practically how it works. If you have to buy back the shares and you have to give the complete disclosure, you see procedure before buyback, subsection 3. What is the requirement? There is a notice of the meeting. There is an explanatory statement, right? This has to go to everyone,
Yes, sir.
right?
Yes,
So
sir.
buyback may be from the existing shareholder or security holders on a proportionate basis. How you will achieve this proportionate basis? You have to give notice to every shareholder that yes, there is a buyback going to happen, and this is what is the terms of the buyback, and this is what at the price with which it is going to be purchased, and whosoever is willing, they should give. This is how it will work, isn't it?
Sure. Okay, sir.
Yeah.
Yes. Okay.
Right. Okay.
Thank you, sir.
Now let us move further, and now we will talk about debentures. Okay. Any question till this
Special resolution
point?
need to be passed, right?
Yes.
In case of buyback,
There has to
special
be
resolution.
a special resolution which needs to be passed. But if it is amount is 10%, then board resolution is sufficient.
Okay, sir.
Right? This is what the provision said. Okay. Now let us move further and talk about the debentures. Now, debentures is covered in one section, but there is a rule which covers it in detail. So debentures are defined in section 2 subclause 30, and it says debenture includes debenture stock. It is just like share stock, bonds or any other instrument of a company evidencing a debt, whether constituting a charge on the asset of the company or not, provided that following shall not be treated as debentures. The following are exempted from being treated as debentures. That is, the instrument referred to in Chapter 3D of Reserve Bank of India Act. So Chapter 3D of Reserve Bank of India Act talks about derivatives, money market instruments, securities, etc. So this is an exception, or the money market instruments covered by the Reserve Bank of India, that is exempted. Second, such other instrument as may be prescribed by the central government in consultation with the Reserve Bank of India issued by a company. So Reserve Bank of India can provide for certain exemptions, because many a times whenever you are talking about debt and creditor, RBI gets a role to play, as you would have seen in case of insolvency and bankruptcy code also, because most of the times debt will be given by the banking institutions, financial institutions, right? Now let us look at the types of debentures. There are three basic premises on the basis of which debentures are classified. The first one is on the basis of security. So debentures can be classified on the basis of security. It can be classified on the basis of convertibility to the shares and on the basis of redeemability. This you would recollect. We have the different in case differential shares also. So when we are talking about on the basis of security, either the debenture can be secured or it can be unsecured. Whenever we are talking about debenture getting secured, what does it mean? That it has got a collateral security, or it has got a charge created on the company's asset. Either this can be a free charge or it can be a fixed charge. That I think you are having a section, you are having a session in detail on charge. So you will read that. But the debentures can be secured and unsecured. On the convertibility basis, debenture can be convertible, mandatory or optionally, partially or fully. So convertible, whenever a debenture is a convertible debenture, it can be either mandatory convertible or optionally convertible, or it can be partially convertible, or it can be fully convertible. You would recollect the Sahara case in which optionally convertible debentures were issued, OFCDs, okay? And that was a case, interesting case to read in when you talk about debentures and public issue. Non-convertible debentures are not to be converted as shares. On the basis of redeemability, there can be debentures which are redeemable, or there can be debentures which are irredeemable, right? So these are the different options for which the debentures can be opened, or types of debentures. Now let us look at features of a debenture. Debenture has many features, okay? And some of these features are outlined here. Let us read what is the first one. The debenture is the smallest unit of a sizable amount of a loan. So debenture is basically nothing but a loan, or you can say a debt. When the debenture are issued, the applicants are given certificates representing the money they have lent to the company. A debenture certificate is issued by the company under its common seal. Nowadays, common seal is not there, so there will be a signature of two directors, or a director and a company secretary of a company. The company pays periodic interest on the amount raised by issuing debentures till they are fully redeemed. A debenture is generally prefixed with the rate of interest which the company intends to pay. So the rate of interest is decided beforehand. Voting rights are not available in case of debentures, as section 71(2) of the Act clearly states no company shall issue any debentures carrying any voting rights. Further, as per section 44 of the Act, a debenture is in the nature of movable property, which is transferable as per the provisions contained in the articles of the company issuing the debentures. A debenture may be secured or unsecured. In case of secured debentures, a charge is created on the asset of the company in favor of the debenture trustee. We will talk about debenture trustee in a while. As per the terms of the issue of debentures, there may be redeemed, that is, it repaid at the end of the full term, or in installments, say for example, bi-yearly or any other period in 2 installments. The term of issue may also be provided for conversion of debentures at maturity into equity shares at the option of the debenture holders, which is basically an optionally convertible debenture. A debenture certificate are required to be delivered within a period of 6 months under Section 56(4)(d) of the Act from the date of allotment of debentures, unless the company is prohibited by any provision of the law or any order of the court, tribunal, or any other authority. So the debenture certificates has to be also issued. Let us look at the practical aspect of it. If you see, have a look at it in this particular slide. I just wanted to show you. This is Reliance Industries Limited, and this you can see its shares value there. But if you can see the instruments on the left, bottom, in orange, it is highlighted: equity, derivatives, debt, and SLB. So your equity derivatives are mentioned. So these are different types of instruments which can be issued. Here you can see prices as on January 28, January 15. So this was the date when which this debt was issued. RIL 9%. 9% is the interest on this. 21, 1, 25 private. So there is a number also of this particular debenture. Upper price, lower price, face value of this debenture. And, rating is also there. Maturity date, you can see 21st January 2025, this debenture will mature. Listed. And this is the overall, debenture which is listed here. This is just for your information so that you can relate what we are talking about when we are say debentures. Debentures are also a marketable security. Okay. It can be traded. Now, you also refer to Regulation 56 of SEBI LODR. SEBI LODR deals with listing obligation and disclosure requirements for the listed companies. So 56 deals with debentures. What Section 71 says? It says a company may issue debenture with an option to convert such debentures into shares, either wholly or partly at the time of redemption, provided that the issue of debentures with an option to convert such debentures into shares, wholly or partly, shall be approved by a special resolution passed at a general meeting. So whenever you are having the convertible debentures, then you need to pass a special resolution at a general meeting. Because if you convert it to equity, then all shareholders should agree. No company shall issue any debentures carrying any voting rights. No debenture shall be issued with a voting right. However, once it gets converted into equity, it will have a voting right. Secured debentures may be issued by a company subject to such terms and conditions as may be prescribed. So you need to refer to Rule 18, which prescribes detailed procedure. Where debentures are issued by a company under this section, the company is required to again create a debenture redemption reserve, that is called DRR. Basically, these are all escrow accounts, so idea is basically that whatever money you are taking for one account should be kept in that account itself. And so that you can track them properly, so that you can have a proper accounting system for maintaining these particular funds. You don't mix them up. Okay. So that is why for debentures, whenever there will be a debenture issued, you have to create a debenture redemption reserve account out of the profits of the company available for payment of dividend. And the amount credited to such account shall not be utilized by the company except for the redemption of debentures. Okay. Because 9% interest, if you have promised, that interest money needs to be there. So whenever you earn the profit, you just put that money in the debenture redemption reserve. If you don't do it, then what will happen? There may be a default, and once default happen, your company may go into corporate insolvency. This is a SEBI document, and it is talking about the terms and conditions of the debenture trustee and how debenture trustee shall function. So no company shall issue a prospectus or make an offer for invitation for public to its members exceeding 500 for the subscription of its debenture, unless the company has before such issue or offer appointed one or more debenture trustees. So till 500, you don't require appointment of a debenture trustee. You can go ahead without debenture trustee. But once you move beyond 500 members to whom the debentures are issued or debt are issued, in case of private company, what is the maximum number? 200. But if you are offering debentures, then in that case, maximum, what is the number? 500. And the condition governing the appointment of such trustees shall be such as may be prescribed. Let us look at it. The debenture trustee takes Why? What is the role of a debenture trustee? Debenture trustee's role is to protect the interest of debenture holders and redress their grievance in accordance with such rules as may be prescribed. The central government may prescribe the procedure for securing the issue of debentures, the form of debenture trust deed, the procedure for debenture holders to inspect the trust deed, and to obtain copies thereof, quantum of debenture redemption reserve required to be created, and such other matters. So central government has got powers to frame rules relating to the management of debentures. And it has framed rules also. As you can see, share capital and debenture rules are there. Now, 18 talks about these rules. So 18.2 of the company's share capital and debenture rules states name and consent of debenture trustees. There is a requirement of name and consent of debenture trustees. The name of debenture trustees shall be stated in the offer letters and notices or subsequent thereto. There has to be a written consent before appointment of debenture trustee must be obtained. Just like directors, before appointing them as directors, a written consent is required. Who can be debenture trustees? The following persons shall not be appointed as debenture trustees. So this is a negative provision where this is providing a list of people who cannot be appointed as debenture trustees. Let us look at who are these people. The first one, a beneficiary holders of shares in the company. This is first. Second, a promoter, director, or key managerial personnel or any other officer or an employee of the company or its holding subsidiary or associate company, relative of any promoter, director, or key managerial personnel of the company. A beneficiary entitled to money to be company otherwise than the remuneration payable to the debenture trustee, who is indebted to the company or is a subsidiary holding or associate company or a subsidiary of such holding company. So these are the people who cannot be the debenture trustees. Further, a person who has furnished any guarantee in respect of principal debts secured by debentures or interest thereon cannot be debenture trustee, or a person who has any pecuniary relationship with the company amounting to 2% or more of its gross turnover or total income or 50 lakh rupees or such higher amount as may be prescribed, whichever is lower during the 2 immediately preceding financial years or during the current financial year cannot be the debenture trustee. This provision is very important because it shows significant beneficial interest or significant financial interest or material interest in the company. So these people are also excluded. If you see similar kind of a pecuniary condition is there for independent directors. Okay, they cannot have 2% or more of its this as a fees or something like that is provision. Removal of debenture trustee prior to his term. A debenture trustee may be removed from his office before his term expires if it is approved by the holders of not less than 3/4 in value of the debentures outstanding. It is not members, by the way. Okay, it is talking about value. So it is voting of the valuation of debenture holders. Filling of the vacancy, how you fill up, there can be a casual vacancy. Board will fill that casual vacancy, can be filled up by board. And whenever there is a vacancy caused by resignation, with the written consent of the majority of the debenture holders can only be fulfilled as a debenture trustee. Casual vacancy can be by way of a death or maybe insolvency or something like that. Okay, there is an incapacity of a debenture trustee. But if it is a resignation, then definitely there has to be a requirement of the consent from the majority of debenture holders. This is a document, a debenture trust deed given by SEBI. So there is a requirement, legal requirement is that within the period of 3 months of the closure of the issue or offer in the form SH12, there has to be a debenture trust deed executed with the debenture holders and the closure of the issue of the offer. So you can see this debenture trust deed is having number of provisions. You can see the form of debentures, covenant to pay, what is security, consequences of and default, trust of proceeds, notices, governing law jurisdiction, calculations and certificates, cost and expenses. These are all terms and things which have been mentioned here in case of debenture trustee. Is it clear? Now, if you see, let us move further and talk about debenture trust deed has been seen. Now see what further it is saying. It says any provision contained in the trust deed for securing the issue of debentures, contract with the debenture holders secured by a trust deed shall be void insofar as it relates to have an effect of exempting a trustee therefrom or indemnifying him against any liability of breach of trust where he fails to show the degree of care and due diligence required of him as a trustee, having regard to the provisions of the trust deed, conferring on him any power, authority or discretion. So what is this provision saying? ये बोल रहा है basically कि जो भी डिबेंचर ट्रस्टी होगा, whosoever is the debenture trustee, that cannot absolve its liability, right? So they cannot mention in the agreement that yes, we will not be liable for certain things. Okay. So this liability is unconditional. You cannot put conditions to this particular liability of a debenture trustee. Provided that liability of debenture trustee shall be subject to such exemptions as may be agreed upon by the majority of debenture holders, holding not less than 3/4 in the value of the total debentures at a meeting held for the purpose. So all the debenture holders, if 3/4 of them agree to reduction in liability, that can be done, but that has to be done prior. That cannot be done later on, basically. Okay. Now, where at any time the debenture trustee comes to a conclusion. So this is a situation where debenture trustee has to take an action. So wherever there is a debenture trustee who feels that the asset of the company are insufficient or are likely to become insufficient to discharge the principal amount, then the debenture trustee may file a petition before the tribunal. And tribunal will hear the company or any other person who are interested in the matter. And in that situation, it may impose such restrictions on the incurring of any further liabilities by the company as the tribunal may consider necessary in the interest of debenture holders. And you have seen in our previous sections also, if there is a default or if there is a problem relating to solvency of the company, they are number of privileges which are taken away from the company. So hence it is important that the company meets the requirement of debenture holders through debenture trustee. Now let us move further and talk about the default. What happens when there is a default? So a company shall pay interest and redeem the debentures in accordance with the terms and conditions of their issue. Where a company fails to redeem the debenture on the date of its maturity or fails to pay the interest on the debentures when it is due, the tribunal may, on an application of any or all of the debenture holders or debenture trustees, and after hearing the parties concerned, direct by order the company to redeem the debentures forthwith on payment of principal and interest due thereon. So this is the requirement where the debenture trustee or the holder of securities can reach out to the tribunal for disposing of the petition and giving an appropriate order. Now, if you will see, subclause 12 says that a contract with the company to take up or pay any debentures for the company may be enforced by a degree of a specific performance under the Specific Relief Act. So it is like a specific performance. So if they are not agreeing, the company is not agreeing to any of the conditions of the contract, then in that situation, it can be specifically enforced in the court of law. If you see, this provision of default has been removed in case of debentures. So what is the maximum period? But before I move to this particular slide, I would like to ask any questions which I have seen. Or what we will do is let us complete this slides and then we will open for questions, and you can ask as many questions as you want because today is the last session of this course, this topic. So maximum period for secured debentures. So the tenure of secured debentures shall not be more than 10 years. So maximum period is 10 years from the date of issue, except the following cases where the tenure can go up to 30 years. Do you recollect what is the maximum period for preferential shares? Redeemable preferential shares? Can you put it in chat box? Yeah. 20 years. Okay, very good. And for infrastructure infrastructure preferential shares relating to infrastructure, yes, 30 years. Okay, good. So here for infrastructure, it is 30 years. Companies engaged in setting up infrastructure projects. Infrastructure finance companies, as defined in clause this, sub-regulation T, non-banking financial companies, infrastructure debt fund, and companies permitted by Ministry and Department of Central Government, RBI, National Housing, all these people can issuer debentures for exceeding 10 years, right? Otherwise, debentures can be issued at 10 years. You saw the Reliance example, it was issued for 10 years, 2025. 2015, it was issued, no, for 20 years. So probably they would have reviewed it, or maybe it is for infrastructure project. Mining is an infrastructure project. A company shall, this I have already discussed. Now let us talk about appointment of debenture trustee. So this is as per rules. So appointment of debenture trustee shall be appointed by company before the issue of prospectus or letter of offer of subscription of its debentures. So whenever there will be a debenture which is issued, there has to be a letter of offer or prospectus has to be issued. Security for creating of charge. So debenture requires security. If it is a secured debenture, security for debenture can be provided by way of creating a charge or mortgage in favor of debenture trustee. On what? On a specified movable of a company or its subsidiaries or its holding company or its associate companies, or specified immovable properties wherever situated or any interest therein. This is the requirement of creation of charge. Now here it is important to note that value of such assets or properties upon which charge is created shall be sufficient for the due repayment of the amount of debentures and interest thereon. Nowadays, we are having registered valuers, so debenture trustee may appoint registered valuer, or they can assess themselves that what would be the sufficient, security. In case of NBFCs, the charge or mortgage may be created on any movable property. In case of any issue of debentures by a government company, which is fully secured by the guarantee given by the central government or one or more state government or by both, as per the requirement for creation of charge under Rule 18(1) of the company's share capital and debenture rules shall not apply. So government company is exempted in this particular situation of issue of debentures, and they are having more relaxation because government requires funds, like say, for example, NHAI or similar kind of a body. If they are issuing a debt instrument, then there are certain relaxations which can be given to them because anyways government is standing security to that. Now, creation of debenture redemption reserve. So as I told you before, there is a requirement of creation of debenture redemption reserve under section 71 and 18(7). So the main purpose of these relaxation, there are some relaxations which are given to banking companies as well as to all India financial institutions. They are exempted. Listed companies other than all India financial institutions are also exempted, except NBFCs not registered with RBI or housing finance companies not registered with National Housing Bank. So objective is that they should register with these entities, and there is a regulation over it. For unlisted company, DRR equal to 10% of the outstanding debenture is required, and DRR of equal to 10% of outstanding debenture is required in case of private companies also, except NBFC registered with RBI and housing finance company registered with National Housing Bank. So this is the requirement of maintenance of DRR. Now, amount and method of investment of deposit of debentures maturing during fiscal by April 30th of every each year. In case of listed company other than all India financial institution and banking companies, it will be publicly placed debenture. In case of unlisted company other than all India financial institutions and banking companies, publicly placed debenture and privately placed debentures other than those by NBFCs. This is what an amount equal to 15% of its debentures maturing during the financial year ending the 31st day of March of the next year shall be invested or deposited in any of the following methods of deposit or investment, where they can invest this money: deposit with any scheduled bank free from any charge or lien, unencumbered securities of the central government or state government, unencumbered securities mentioned in subclause A to D and EE of section 20, or unencumbered bonds issued by any other company which is notified in subclause F of Indian Trust Act. So this is the requirement where the money can be invested. What is the objective? Objective is that money should be secure. It should not be with lien or there is a problem with relating to that investment whenever there is a redemption of that particular debt comes up. So objective of the debenture trustee should be to maintain the security and secure that particular amount properly for the debenture holders. That's it. I think I have completed this presentation. Now I open the floor for any question. I'll stop share this so that you are able to see me properly. And you can raise the hand and open your mic and ask your question, whatever you want to ask. Go ahead.
सर इलिस्ट्रेशन 1 में जो ऑप्शन करेक्ट है वो आंसर समझ नहीं आया कि वो क्यों करेक्ट है, वही सबसे डाउट मैं पूछ रही थी।
कौन सा? अच्छा, वो जो आप ये भानु वाला एग्जांपल बोल रहे हो?
यस सर।
यस, उसमें बेसिकली पीरियड ये बोला है कि आपको अगर ट्रांसफरर और ट्रांसफरी दो लोग होते हैं, वेन एवर देर इज अ ट्रांसफर ऑफ शेयर्स, ओके। तो आप जब रजिस्टर करने के लिए आपको रजिस्टर करना है और ट्रांसफरर ने एप्लीकेशन डाली है, ठीक है, और उसमें ट्रांसफरी का कोई सिग्नेचर नहीं है अगर, तो नो ऑब्जेक्शन लेना होता है ट्रांसफरी से। तो वो नो ऑब्जेक्शन 2 वीक्स के अंदर देना है ट्रांसफरी को, अदरवाइज इट विल बी कंसिडर्ड कि हाँ ठीक है भाई, वो आपका ऑब्जेक्शन नहीं है, ठीक है। वो 2 वीक्स इज 14 डेज, राइट। तो आपको जो दिन को नोटिस दिया है उसके बाद आपने 14 दिन ऐड करना है। तो इस केस में 2 मार्च है, आप 14 उसके बाद ऐड करेंगे तो देन इट बिकम 16 मार्च। दैट इज हाउ इट इज कैलकुलेटेड। आपको आया समझ में?
सर ये सर ये वाला तो आ गया, और जो वोटिंग राइट्स वाला है वो वाला नहीं समझ में आया, वो कैसे कैलकुलेट किया है।
आप क्वेश्चन फ्रेम करिए, क्या वोटिंग राइट का क्वेश्चन नहीं समझ में आया?
सर्वोदय अर्बन निधि लिमिटेड has rupees 14 crore and 6 crore as a paid up equity and preference share
एक
capital
मिनट रुको,
respectively.
एक सेकेंड रुक जाओ, मुझे कौन सा बोल रहे हो? लेट मी हैव अ लुक एट इट। विच क्वेश्चन इट इज इन योर मॉड्यूल?
सर मेरे मॉड्यूल में क्वेश्चन नंबर 1 है एमसीक्यू।
अच्छा, नहीं हमारे इसमें तो नहीं है। ओके, ठीक है, आप पूछिए क्या है।
सर सर्वोदय अर्बन निधि लिमिटेड करके क्वेश्चन।
सर्वोदय अर्बन निधि लिमिटेड वाला मैंने आंसर किया था अभी थोड़ी देर पहले।
सर उसका जो कैलकुलेशन है वो नहीं समझ में आ रहा है, जो ऑप्शन उसने आंसर में करेक्ट दिया हुआ है।
अच्छा, ये फिर मुझे ना ये प्रॉब्लम देखना पड़ेगा। आई डोंट हैव दैट प्रॉब्लम बिफोर मी राइट नाउ, so let me have a look at that particular problem. If you have that problem and you can put it in the chat box, just put it, then I will have a look at it, what it is saying. Okay, next, anybody else has a question?
Sir,
Yes,
sir,
go ahead. Hmm.
sir, in subsection 5 of 71, 500 members limit is given.
Yeah.
Sir, that rule is overriding 2 subsection 68, 2 clause 68, sorry, of
No, 2 clause 68, what does it say?
private company of 200 members.
No, but that members is of equity, no? It is a debt.
Sir, in case of a private company, 200 members for per annum for each and every security. So, sir, 200 member for debt, 200 member for preference, 200 members for equity.
No, okay. That is 268.
Yes, sir. Or the private placement also, sir, you can refer same
Okay,
clauses.
let me see 268. What does it say? Yes, 268 defines private company and it says restricts this. So, okay. No, but it is only saying limits the number of its members to 200.
Sir, here it is written just limits the member to 200. But in sir section 42 private placement, it is written that 200 members per annum per financial year, which means
No,
for
but when
each
you
and
are,
every security.
which section you are referring to?
42, sir, private placement. In rule
Just a
14,
second.
it is written.
Okay, I'm not referring to rule, I'm referring to section.
So, sir,
एक second.
section can override.
Section is the primary thing, no? Rule cannot go beyond section. The rule may have certain qualification. Which rule you are referring to?
Rule 14 of section 42.
No, rule 4. Okay, just a second. Let me go back to section 42 and see what you are saying. Offer of securities on private placement. This is what you are referring to.
Yes, sir.
And which rule you are referring here? 3, subclause 3. Which 3?
Sir, 1 minute, sir.
You are referring to company's prospectus and allotment security rules?
Yes, sir.
Okay.
Sir, it is
So,
written that 200 members per financial year for each and every security, each and every class of security.
okay.
So, sir, this means that debentures can be only for in private company can only be restricted to 200. Then this is for only for public company. This is my doubt.
Okay. For private company, it is for 200. For public company, it is for 500. This is what you are saying.
Yes, sir.
Okay. Let me check. 71 you said, no? Okay. 71.7 you are referring, right?
Yes, sir.
Because no, it's not 71.7. You were saying basically which section 500 is mentioned.
Subsection
Yes,
5.
5, subclause 5. It says no company shall issue a prospectus or make an offer or invitation to the public or to its members exceeding 500 for the subscription of its debentures, unless the company has before such issue or offer appointment. No. See, point is that this is with reference to appointment of debenture trustee. It is not with reference to issue of debentures. Are you getting the point?
Okay, sir.
So wherever there
Okay,
will
sir.
be a issue of debentures to more than 500 people, the provision relating to debenture trustee will apply.
Okay, sir. Sir, I
Got it?
misheard it. Yes.
Yes. Yeah. So
And sir,
that these provisions are distinct then. That stands.
okay, sir. Sir, one
Okay.
small. Sir,
Yes.
if sir we have a buyback of shares in the act, then why there is a reduction of capital? Sir, the work of buyback and reduction are same.
Yes, so these are different provisions which are mentioned in the Companies Act to provide extra what you can say security. So these may be utilized for different purposes. So in case of reduction of share capital, there are different provisions, no,
Yes, sir.
which includes buyback.
Yes, sir.
Right. So buyback may be done by the companies in those situations which are mentioned in the section. So
Okay, sir.
it is giving multiple options to the company basically.
So, sir, if we have done buyback, then in cooling period, if we want to reduce our capital, we can go for reduction of capital in section 66.
These are two different independent sections. So definitely yes, you can.
Okay, sir. Thank you, sir.
Right. So Vaishnavi has put up a question. Hardik, have a look at it. What do you think is an option? This is for remaining people also. What do you think? This is a what in Kaun Banega Crorepati we had that, no? Voting poll, audience poll. So let us have an audience poll on this question. In the meanwhile, I am reading it. Sarvodaya Urban Nidhi Limited has 14 crores and 6 crores as paid up equity and preferred share capital respectively. Balance and retain earning account is 2.4. Equity share capital having face value of 10. While preferred share has a face value of 100. Is Mr. Surya and Mr. Chandan own this much shares respectively in context of resolution placed before the company which directly affect the rights attached to its proportion. Voting items to Mr. Chandan in percentage term shall be. Okay. Okay. I will post it for everyone. Just a second. So you are able to see the question now? Yeah.
Yes,
What do you think is the answer?
sir. मेरे according to option B correct आ रहा है, but option C
Okay.
correct option दिया हुआ है.
Okay. Let us have a look at the audience poll, what they say. This I explained basically as per the preference, but you have to calculate it. So let us look at the calculations what people have done. Yeah. There has to be some calculations which has to be done here. Okay. You people are all CAs. So do the matlab prospective CAs. Do the calculation. So it is 14 crore and 6 crores. And that is 20 crores. Yes. Are we having answers from people? Okay. Option B, it is very close actually. So why not option C? Anyone would like to answer? How you have made the calculation? To assist your colleague. Yes. Go ahead. You can use the chat box to answer. I've received one answer. Yes, Hardik. Are you there? Use the chat box. Or you can open your mic and speak as well.
Sir,
Hmm.
Sarvodya's capital is given,
Hmm.
and sir, simply the capital is divided by the number of shares in its
Right.
proportion.
Mm-hmm.
And sir, 5.6 and 2.8 exact is coming.
Okay. That is what is the calculation. So you have divided what number with what number?
Sir, I've done it on calculator. Can you give me 5 minutes? I will divide it.
Yeah.
5 minutes.
No, what I'm saying basically is which number you have divided with what number? 14 crore you have divided with?
Sir, 14 crore is the paid up capital, and
Yes.
it is of rupees 10. So
ठीक है.
sir, the number of shares will come, and the number of shares in that proportion is 11,20,000. From that, 5.8% will come because shares are there. 11,20,000 divided by 1 crore 40 lakh shares, 5.6.
Okay.
And sir,
Okay.
similar in case of
So basically, what you have done is two-step procedure which has been followed, right? So, no, just a second. Who asked me? Vaishnavi. Vaishnavi, two-step process. So basically, your 14 crore is converted into shares first, the valuation, and then that amount is divided by how much these people own, isn't it? That is what you have done, right?
yes sir, yes sir.
And then you get the exact percentage, 5.6 and 2.8 respectively.
Sir, the answer given, like the answer which is given, it is, I think so, it is wrong.
Okay, it answer is given C there.
Yes, sir.
Okay.
Because sir, minor only 0.6 difference is there. In case of Mr. Surya and Mr. Chauhan, 2.8 is same.
Okay. Fine then. This is what is the answer? Yes, Tanu, go ahead. You can raise your hand. You can ask also. Go ahead. Speak. You can use your mic.
सर कौन सा ऑप्शन है ये वो समझ में नहीं आ रहा है.
हाँ, वो बताया तो अभी आपको ऑप्शन नंबर बी सही है. और क्यों सही है वो उसका रीजन बताया ना आपको. पहले जो 14 करोड़ और 6 करोड़ है उसको आप कन्वर्ट करिए नंबर ऑफ शेयर्स में, और उसको फिर डिवाइड करिए जितने शेयर्स उनके पास है. उससे आपको परसेंटेज पता चल जाएगी कितने परसेंट शेयर्स हैं उनके पास.
सर मॉड्यूल में आंसर सी दिया हुआ है तो क्या वो
हाँ,
गलत है?
वही वही अभी चर्चा कर रहे हैं हम कि क्या सही है वो गलत है. तो ये क्वेरी आप रेज कर दीजिए एक बार फिर से दोबारा, जो तो फिर वो आंसर करेंगे आपको एक्चुअली कैलकुलेट करके. मॉड्यूल में सी दिया हुआ है बट हमारे
यस सर.
कैलकुलेशन के हिसाब से तो बी आ रहा है. दैट इज व्हाट.
ओके सर.
हम्म. ठीक है. तो कभी कभी कंफ्यूजन हो जाती है ये. आप
ओके सर,
आप
थैंक यू.
आपको प्रोसीजर पता होना चाहिए. आपके प्रोसेस के हिसाब से क्या आ रहा है, आपने प्रोसीजर फॉलो किया है, क्या प्रोसेस
यस सर,
फॉलो किया
मेरे
आपने
अकॉर्डिंग भी
कैलकुलेट.
ऑप्शन बी आ रहा था तो
तो
मुझे
बस फिर
लगा
वो
कि
ऑप्शन 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 बी सही है आपके अकॉर्डिंग. अगर आ रहा है तो ऑप्शन बी सही है. कभी कभी टाइपोग्राफिकल एरर हो जाती है मॉड्यूल्स में. बाकी वैसे आप
ओके सर.
उसको क्रॉस चेक कर सकते हैं मेल पे, या ये क्वेरी रेज कर दीजिएगा स्पेसिफिक मॉड्यूल के साथ. ओके.
ओके सर.
हाँ, तो उसे
थैंक यू
करेक्ट
सर.
करा दिया जाएगा. ठीक है. यस. Anything else? Any questions? Any further questions you have? You can ask me. We have plenty of time to discuss all the questions. Yes. Go back to your module, have a look at it. Any questions from the previous sessions also? If you have, I will be happy to answer them. Just raise your hand and you can speak. Okay, so if there are no doubts, then what do we do? I am here. If you have any doubts, you can ask me. If you don't have any doubts, then a very, very happy Diwali to all of you. Yes, Anushka, go ahead.
Sir, can May 24 books be used for May 25?
See, there are not major changes which has happened in these particular books. Okay, there will be some incremental changes which have happened because of rules. So my advice to you would be that please, refer to the latest provisions, because in your modules, in examinations, whatever will happen, you have to update yourself.
Okay, sir.
That is the requirement. So if you see the compare these particular modules, there are not major changes except some rules, regulations which have been further updated. So my advice would be to refer to the latest one as well as do a comparison so that whenever there is a question, you are able to relate to it.
Okay, sir.
Because generally, whenever there will be a question paper which will be set, will be on the basis of the module which is given to the question paper setter. Okay. So if they are looking at 2024, they will set the thing as per 2024. But as a student, you have to answer it with the latest thing. Major challenge comes up only in case of MCQ. Because if that is based on specific rule or specific fact, then there becomes a challenging situation. But generally, it won't be. So there are not much major changes. This is a technical question which you should ask to your coordinator also. So I am sure you must be having some email through which you can ask this question to the coordinator.
Okay, sir.
Yeah, they will be giving you exact reply on this, that which one to follow. I have given you my understanding what it would be. Okay?
Yes, sir.
Yeah. Anybody has a question from the portal, admin portal? Let me see. Ankit has a question. How buyback of shares impact creditors? Yes, buyback of shares impact creditors, Ankit, because whenever you will buy back, your share capital will reduce, paid up capital will reduce. So whosoever is a creditor is relying upon this particular capital to lend the money, and that is a security kind of thing for them. So that is why there is a requirement. There is a requirement, or creditors look towards the capital of the company. Okay, so it is important. That is the reason why you look at that. As far as your section 59 subclause 2 is concerned, let me have a look at it. What you are asking, section 59 subclause 2. Okay. So it is basically rectification of register of members, it is saying. Okay. And in that, it is saying the tribunal may, after hearing the parties to appeal under so and so, by order, either dismiss the appeal or direct that the transfer or transmission shall be registered by the company within a period of 10 days of the receipt of order or direct rectification of the records of the depository. So basically, it is telling you a situation where, in case of a private company, they have not registered, or there is a requirement of a change or rectification in the members, or if there is an incorrect rectification, then in that situation, you move to tribunal for necessary remedy, and tribunal gives you the remedy for rectification of the register. Okay, this is what this thing says. Kiran Kumar, you have a number of questions. If you can just open your mic and ask your question, it will be easy for me. In your portal, I see questions, but if you can ask it. तनु, वेरिएशन ऑफ शेयर होल्डर राइट जो चीज है बेसिकली वो ये होती है कि जो भी शेयर होल्डर इक्विटी शेयर होल्डर है उसको हम लोग अलग अलग राइट वैरी करके भी शेयर्स दे सकते हैं. ठीक है, जैसे वोटिंग राइट्स एक्स्ट्रा दे दिए हमने, जो प्राइवेट जो ओनर्स, जो कंपनी के ओनर्स होते हैं और वो पब्लिक में कन्वर्ट करते हैं, तो बहुत बार वो बोर्ड का कंट्रोल अपने पास रखना चाहते हैं। तो कैसे रखेंगे? तो इसलिए उनकी जो शेयर्स होती है उसमें एक्स्ट्रा राइट्स उनको दी जाती है, दैट इज कॉल्ड स्पेशल राइट्स। और ये जो है वो उसकी प्रोविजन होनी चाहिए वेरी शेयर होल्डर के राइट्स को देने की। और जब भी आप किसी भी शेयर होल्डर के एग्जिस्टिंग राइट को वेरी करते हो तो आपको प्रोसीजर फॉलो करना पड़ता है। ये बेसिकली वेरिएशन ऑफ शेयर होल्डर राइट का प्रोविजन कहते हैं, दैट इज द रिक्वायरमेंट। क्योंकि आप किसी भी शेयर होल्डर का राइट वेरी बीच में नहीं कर सकते अपनी मर्जी से, वो आपको करना होगा टू आफ्टर फॉलोइंग द प्रोसीजर। दैट इज वाई यू सी इन ऑल दीज प्रोविजंस, जहां पे भी शेयर होल्डर की वोटिंग राइट्स इफेक्ट हो रही है वहां पे ट्रिब्यूनल को पावर दिया गया है फेयरनेस इंश्योर करने के लिए। तो उन सिचुएशंस में हमेशा ट्रिब्यूनल डिसीजन लेती है कि ये फेयर सिचुएशन है कि नहीं। आई होप आई हैव यू हैव गॉट द पॉइंट ऑन वेरिएशन ऑफ शेयर होल्डर राइट। ओके। Yes, yes, I am there. If there are any questions, you can ask. I'll be here till 8:30. So any one of you, if you have any questions, you can please ask the question. Okay. It seems the students don't have any question so far. I think we didn't take a break. That is why probably we have completed early. So let us close this session for today. Looking forward to have an interaction with you all in future. And if you still have any questions, reach out to us through the portals and everything. I think we have covered two very important topics. All the best for your future learnings with the Board of Studies ICAI, as well as wish you all a happy Diwali. Thank you. Now you can close. Thank you.